Welcome to today's market report.
Global equity markets reached new highs for the second straight session, boosted by US equities, while Treasury bond yields eased and the dollar was little changed as investors awaited jobs data that could sway Federal Reserve monetary policy. The Pan-European Stock 600 index European stocks closed with 0.53% decrease. German DAX fell 0.34%, whilst France's CAC 40 slid 0.89%, and Britain's FTSE 100 index dipped 0.88%. The region's sectoral index for travel and leisure stocks fell to a one-month low. However, JP Morgan analysts do not expect a long-term negative impact. While the Delta variant might slow the easing of restrictions in some countries, it is unlikely to pose a significant threat to the ongoing recovery. On Wall Street, the Dow Jones Industrial Average fell 0.44% to 34,282.28. The S&P 500 gained 0.23% to 4,290.58, and the Nasdaq added 0.98% to 14,500.51. Chinese shares were a touch higher, with the CSI 300 index up 0.2%. Data over the weekend showed profit growth at China's industrial firms slowed again in May as surging raw material prices squeezed margins and pressured factory activity. Investors will keep a close eye on official factory activity from China due on Wednesday. The manufacturing reading is expected to slow to 50.7% from 51. The private sector Caixin manufacturing PMI will follow later in the week. Weaker than expected US inflation and the news of a possible bipartisan US infrastructure agreement over the weekend boosted risk appetite on Monday. The infrastructure plan is valued at $1.2 trillion over 8 years, of which $579 billion is new spending. While less than the White House initial proposal, the total amount will likely be greater than Republicans' initial figure and may lead Congress to a two-bill track, which would be a boon for the reflation trade, according to UBS. While still near record highs, growing concern about the spread of the Delta variant of the COVID-19 virus weighed on the European markets. Oil prices fell 2% to a one-week low after hitting their highest since 2018 earlier in the session, pressured by the spike in COVID-19 cases in Asia ahead of this week's OPEC Plus meeting. Brent settled down 1.97% at $74.68 per barrel. Crude was last down 1.51% at $72.93 per barrel. Gold futures was down 0.02% at $1,780.70 per ounce. On the FX front, the GBP/USD pair retreated over 50 pips from daily swing highs and was last seen trading with modest gains, just below the 139 mark. The pair struggled to capitalize on its intraday positive move, instead met with some fresh supply near the 139.40 region amid a modest pickup in the US dollar demand. Despite mixed signals on the US inflation, investors remain concerned that the Fed will tighten its monetary policy if price pressures continue to intensify. This helped offset a fresh leg down in the US Treasury bond yields and extended some support to the greenback. It is worth recalling that Fed Chair Jerome Powell, during his testimony before the House Select Subcommittee last week, said that inflation is rising due to pent-up demand and supply bottlenecks. Powell stuck to the transitory inflation narrative and said that the price pressures should ease on their own. However, Friday's core PCE price index recorded the largest gain since April 1992 and shot to 3.4% year-on-year in May. On the other hand, the Bank of England's dovish stance last week continued acting as a headwind for the British pound and further collaborated towards capping gains for the GBP/USD pair. That said, the optimism that the UK remains on track to end COVID-19 restrictions on 19th of July might help limit the downside for the major. The new US Health Secretary Sajid Javid will update MPs later this Monday on when the COVID-19 measures will be lifted in England. In the absence of any major market-moving economic releases, either from the UK or the US, the dollar price dynamics will play a key role in influencing the GBP/USD pair. Euro-dollar is trading at 119.23 and virtually flat towards the closing hours of the US session in a quiet start to the week. Last week's news of optimism about a bipartisan US infrastructure agreement helped risk appetite. The dollar index is up 0.05% at 91.88.
This is today's market news. Thanks for listening. We'll see you next time.